Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the micro bearish scenario where we're looking for a finished wave 1 or A, finished wave 2 or B, and now a move to the downside in a wave C or a wave 3. In this scenario, the common target for a wave C is between the 1 and the 1.236, taken from the high to the low of A to the high of B, giving you a target between 35.1k and 34.5k, which is also close to these target boxes over here, the blue ones just above 35.2 to 35.5k, just below over here 34.3 to 34.5k. Now you can also see the blue line over here, the 1.618, which is relevant for a wave 3, as usually that is a minimum target for a wave 3, sitting at 33.6k, with the target box just above for some extra support, 33.8 to 33.9k. However, the 1.618 is usually a minimum target, as a wave 3 can very much extend to like a 2.618, 3.618, so we have to wait and see patiently how price then moves towards the downside in this particular scenario. If we zoom in to this wave B or wave 2, then we're looking for a WXY sideways double combo correction, with inside W a zigzag, flat in X, and then another flat in wave Y, which is nice because in a sideways double combo, wave W and Y are not allowed to have the same structure. So wave W being a zigzag and flat being a Y is very nice indeed. Now what is not so nice is time though, because if we look at time, then this sideways corrective structure, wave B or 2, is 46 times longer than this wave 1 or wave A, which is incredibly long for a wave 2 or a wave B. Commonly, wave 2 or B are finishing between the 3A2 and the 3/5 time of a wave 1 or a wave A. So 46 times is very long indeed. Now the invalidation for this scenario is price taking the high, moving to the target box that we have above, which is the golden target box over here, sitting between 38.5k and 39k. If we then look at the initially bearish maybe, but then bullish scenario, as we do expect a move to the upside, then possibly we can still expect a move to the downside before continuation up to reach that golden target box. In this scenario, we have a finished structure to the downside in a zigzag, but then we're looking for an A, B, and a wave C over here, where eventually we want to see the golden target box hit. In this particular scenario, wave A has to be a 5-wave structure, which is not that great to count over here. We can count this as a 1, 2, then potentially 3, 4, 5 over here. Instead of this being the high of A, this is then the high of a wave A over here. But if we take the left high at the same time, there's a problem a little bit with both highs, because the one on the right is a nice, this doesn't look like a 5-wave structure over here as well. It fits much better for wave A to finish over here, right, where you have this, where this is then a flat to start a corrective structure with. But if we look at this move to the upside, it's difficult to have a 1, 2, 3, 4, 5 here, because you have a 1, 2, 1, 2, 3, 4, 5, 4, 5, but then you don't have another 4, 5 of the same degree of this wave 2, right? In a 1, 2, and then 3, 4, 5. We never really got that 4, 5, unless this is your 4, 5, but this doesn't really look like an impulsive structure. So this wave A, a little bit of thinking to do with that wave A over there. It's not the nicest, but in this scenario, we were then looking for a potential wave A, B, C in a regular flat. Now wave A can both be a WXY or a 3-wave structure over here. That's absolutely fine. So the position of this A doesn't really matter. Then we're looking for a wave B to the upside over here, which has to be a 3-wave structure as well, and then a more complex structure to the upside, where the 0.9 is a minimum target for a wave B in a regular flat, and then an AB looking for C to the downside, which is an impulse. Most common target for a wave C is below wave A, in between the 1 and the 1.236. And this is nice because we have the target box over here as well, between 36.5, 36.6, as extra support right inside this most common target area for a wave C in a regular flat ABC, before then continuation to the upside. Losing this support, however, would of course be bad, and then the probabilities are high. You're going to reach invalidation, move further towards the downside to at least this target box here, 35.2, 35.4k. Now if we look at this range over here, this is quite interesting. I don't often use the speed fan. It's not really something that I talk about too much, but I did at least mention it last night over here, where I spoke about the speed fan. And what's important is this is pulled from the low to the high. And the golden pocket speed fan over here was respected, price moving up, but we started to lose it. And that's also when I wrote, right, that increases the probabilities for price to then move towards the downside. Doesn't have to go directly. I mentioned, hey, we still got some support as well, right, at 37.3, 37.4K. So that is still very, very interesting for them potentially a move down. But if we go down, the 786 is an area of interest, as well as the target box just below. Over here, we move then towards the upside, hit the daily, right? Retested basically the golden pocket speed fan, moved to the downside, almost at the 786 now, but also the target box just below. The 886 is of course below this target box and can also still act as support from a speed fan point of view. Now inside this target box, the most important support area is this white line, the key level at 36,575, which is a point of control of this little range over here. We had another point of control of this range over here, which got touched with this high for a nice rejection, but this is an interesting area of support on the other side for then a rejection, or you could say continuation back towards the upside. If we look at the CVD divergences, then more locally we do have some bearish CVD divergences over here. This one already played out. This one over here is still in the works. Of course, if price takes this high, it's invalidated as well. But a little bit of bearish CVD divergences. But if I go to the CVD chart over here and I zoom out, you can clearly see, right? Price moving up, CVD is moving down, 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 down. And what I'm missing for the bearish, the bigger bearish scenario for, let's say, a wave 1, 2, and then a wave 3 to the downside, I'm missing the bigger bearish CVD divergences. Like I would like to see bearish CVD between this high and the lower high, or this high and the lower high, right? For then a big push to the upside, because it shows absorption of market long positions with bigger limit short positions for a wave 3 to the downside. The fact we don't see this over here increases probabilities for a bounce to the upside, either in the scenario of this over here being an ABC, which is of course the bearish and then the bullish scenario, or in the scenario of this over here where we have a wave A, we have a wave B, we get a wave C, and then we get a move back towards the upside instead of a bigger wave 3. So currently the wave 3 has the lowest probabilities from an Elliott Wave perspective, also CVD perspective, basically because of the length of this range from an Elliott Wave point of view for a wave 2. But also there's no bigger bearish CVD, which is something I really enjoy seeing when we start a wave 3 to the downside, as it is very, very common indeed. Now, the fact that price moves up and constantly down, yes, bullish CVD, but most of these already played out. Bullish CVD here already played out as well, right? More locally, the bullish CVDs here also played out as price over here took the highs of this range. Preferably, I like to see bullish CVDs locally now. That would give me more trust in the bullish CVD. So we had bearish one over here, lower high price, higher high on yellow. Also here, lower high price, higher high on yellow, as well as blue here, bearish CVD divergences. So what I would be looking for is fresh new bullish CVD divergences, meaning price can go to the downside, maybe hit support here, but at least looking for a bounce to the upside, bit of a structure, move back down, bullish CVD divergences, and then take it from there, right? That is what I would like to see. If price with every bounce now or every range starts to create small bearish CVD divergences, we could simply be looking for a move towards the downside. And if we then look at the probabilities of the different scenarios, then at the moment the more bullish scenarios are still in favor at the moment, like higher probability. Either the bear bull scenario, where we're then looking for this support over here, right, to hold. If this support fails, you still have this low in confluence with the golden pocket taken from the low to this high. So that is like the final bit of support at 36,325. But if you lose the target box, probabilities do increase for a move to the downside, especially if you lose this low over here, for then this target box to be hit, where we can then still be looking for this to be an ABC for continuation, as currently still continuation to the upside to take this high has a higher probability at the moment overall, instead of this being a wave 1, 2 and a bigger wave 3 to the downside, right? And we stay up to date with price, see what it does. Also, wave 2, or this being a wave B over here in the more bearish scenario, right? But this being a wave 2 is incredibly long for a wave 2, which lowers the probabilities of a bigger wave 3 to the downside. The high that we made over here wasn't made at a target box, and I do like my target boxes as pivot points for like the chart to turn around basically. So that is interesting indeed. No big bearish CVD divergences as explained. Now what's important, if you lose the target box over here, this one, and also this low, I'd be looking for a move to the downside. So observing the reaction is very important over here, which is always important. We don't FOMO, YOLO, catch nice. We observe the reaction and make well argumented decisions. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.